Stocks drift after a firm open today, a day ahead of RBI's monetary policy decision. Realty as well as utilities lead the charge, while IT and auto drag and mid-caps fare better.
CNBC-TV18 learns that the government may soften its stance on the retrospective demands of GST from online real money gaming players. Inability of gaming companies to pay up will be a key factor in arriving at a more practical solution.
Brokers body ANMI supports extended trading hours for index futures, paving the way for SEBI to take a call. But the regulator will likely consult the smaller brokers and other market participants before a decision, CNBC-TV18 learns.
Microsoft CEO Satya Nadella tells CNBC-TV18 that AI today for him is like year 2 of the PC or browser. He adds that the adoption of AI is the fastest for any technology he has seen, and he's very excited about being at the forefront of AI in India.
Hello and welcome to Business Lunch. I'm Nisha Podar, and with me as always is my co-anchor Pavitra Parekh. Hi Pavitra. Of course, the market opened with a gusto, but then it has really lost steam coming closer to the low point of the trading session again. So let's take stock of the market at this point. 21,890 odd levels for Nifty 50 at the moment, closer to the low point of the trading session. But remember, it opened above the 22,000 mark, and look at the constant slide that we have seen through the market session today. When we talk about Sensex, over 150 points lost on that one. Bank Nifty is on the flat line at lunch hour, and mid-cap index, that is showing resilience with 0.3% gain. Advance decline ratio in favor of the advances, so there is resilience there because of broader market participating. Now, the largest bank, SBI, is the top gainer on Nifty 50, 3.5% up. And some of the steel counters, consumption companies, as well as some of the banks are doing well today, Pavitra.
Oh, absolutely. So like you said, the market has come off significantly, more than 150 points. And this is a theme that we'd been talking about anyway for the past many days. Yesterday it did not happen, which was great to see. But today, once more, the theme is playing out. I do want to point out that in the broader markets, that is not the case. We did see a dip, but that is now, we have seen a recovery there as well. So the small cap index, for instance, from the lows of the day is up around 0.5%. What's doing very well, a lot of the PSU banks, so some of those will be up on your screen, the smaller names as well, right? So names like IOB, you have UCO Bank, Bank of Maharashtra, all of these doing very well. There's a lot of news flow, so names like Delta, you have Zaggle, which are all seeing big moves. On the downside, some of the PSC companies, the government-owned companies, so stocks like Power Grid, maybe NTPC, ONGC, are coming off a tad. But like we mentioned that while on the surface, it's not looking like there's too much action, there's a lot of action in these individual names. So let's kickstart the show by looking at our top story. First up, sources tell CNBC-TV18 that online gaming companies could get a breather as the government is likely to soften its stance on GST demand notices. So my colleague Timsy, who's tracking the story, joins us now. Timsy, really comes as a big relief for players like Delta Corp.
Well, sources are indicating to us that the government is likely to soften its stand on the retrospective GST demand notices that was sent to online gaming companies. Government has realized, or there's a sort of a realization within the corridors of North Block, that the existential issue of gaming companies, that if they have to pay GST demands that were raised between July 17 till March 23, are they realistic or not? Also, what we are given to learn is that the government is likely to have sought a legal opinion on what could be a way out of the tussle with the online gaming companies that the government is facing currently. And it sees some merit in the argument of the companies that a company cannot pay an unrealistic demand which is as high as several thousand crore rupees. Remember, the matter related to GST demand on online gaming companies is being heard in Supreme Court. An SLP has been filed by the government against the Karnataka High Court order in the Gamescraft matter. And all the cases pertaining this particular issue from various state high courts have been now clubbed under this particular matter. And to be precise, what is the quantum which is at stake? Well, online real money gaming companies have received 71 show cause notices worth 1,12,332 crore rupees in FY23 and 24. And government had challenged this particular Karnataka High Court order, which was pertaining to the 21,000 crore rupees demand just in the case of Gamescraft alone, where Karnataka High Court had quashed this demand. So let's see what happens in the court, how the tussle between the government and the companies actually turn out to be and what is the final outcome. But yes, as of now, some softening of stand is visible. Back to you.
All right, so that could be good news, and that's why some of those gaming stocks, and only one listed actually, is gaining in trade today. But what's also gaining is trend. The results were just flashing on the screens, and looks like that profit and profitability is above what the street was estimating, and that's why that stock is rising. But another one which is up 10% is Paytm, and that is continuing with the recovery of the company as well, the stock as well, after the massive drop that it had seen for 3 consistent days because of the big news that hit the company. Now, let's get you up to speed with the developments related to Paytm at the moment. And the stock is recovering the lost ground and is trading with gains of over 9%, almost 10%. And this after sources tell CNBC-TV18 that Paytm founder Vijay Shekhar Sharma met with the Finance Minister Nirmala Sitharaman and is likely to have discussed the current situation regarding Paytm with the Finance Minister. In fact, staying with the RBI's crackdown on Paytm Payments Bank, let us listen in to Jayant Sinha, the chairman of the Parliamentary Committee on Finance, and DFS Secretary Vivek Joshi, what they had to say about this particular issue.
RBI, of course, is taking appropriate action, and I think that action has been a measured response. Obviously, they are now very, very adept as far as supervision is concerned, as far as their oversight is concerned, and they followed a staged process of flagging concerns and ensuring that consumers are protected. And all of this is built on the experience of the last several years, where we've dealt with many of these kinds of situations, compliance issues with multiple different banks, with NBFCs. And so now the RBI has become quite skillful and quite adept at dealing with this and making sure that depositors and merchants are protected. And it is that if there is a bank that doesn't have the right compliance, the right controls, it is the bank that has to resolve this quickly. But at all costs, consumers, depositors, and merchants are protected.
I won't like to comment much because my minister, the Honorable Finance Minister, has already replied to this question. It was put up to her. And I would kind of repeat what she said. It's a regulatory thing, and in the interest of customers, RBI has taken certain actions on which we would not like to comment.
All right, interesting comments coming in there on Paytm, and very important to look at that. For now, the stock is in upper circuit. It is 10% higher after the big drop that we've seen all through the last week as well. We do need to get into a short break now, but as we do that, we are excited to announce that CNBC-TV18 is back with the second season of India's largest campaign on gender parity. Join us for the mega launch event of HSBC presents CNBC-TV18's Future Female Forward, the women's collective with top leaders, influencers, policymakers and trailblazers, all under one roof to chart a path towards bridging the gender gap. Live from Delhi on Saturday, the 10th of Feb, 5 p.m. onwards, only on CNBC-TV18. Welcome back. You're still tuned into Business Lunch here on CNBC-TV18 India. Well, the good news is that the market has picked up around 40-50 points from the lows of the day. So that's good. We've not fallen anything more. Right now, we're just around 20 points in the red for the index. And the Nifty bank has recovered almost 100 points from the lows of the day as well. I just want to point out some of the banks which are, seeing a very good move today. We've been talking about the PSU banks. Just check out the move on SBI today. Top Nifty gainer. But, even in the past few minutes, there has been a spike that you've seen on SBI. So right now, you have a 3.5% move that has come through on that one. Another stock that I want to point out is Nestle. We just got the earnings a while ago. There has been a little bit of a miss on some of the counters. But, we maybe in the finer details is where there is some kind of positive, because the stock has definitely picked up ever since the results came through. Right now, it's seeing a gain of around 1%. So that's what's really going on with some of these larger names. I'll come back to that. But first up, let's bring you an exclusive now. This is a conversation that Shireen had with Satya Nadella, because he's completed 10 years today as, the CEO of Microsoft. So she spoke to him on a whole host of topics on where Microsoft currently is and on the big AI boom that we're really seeing across tech companies. So let's listen into some very interesting excerpts of that conversation.
In the last 12 months, it's almost as if no one can talk about anything else but AI, whether it addresses climate change or cancer. It's this sort of elixir that everyone's talking about. Between the headlines and the hyperbole, where are we in the journey today? And more importantly, over the next 5 years, where do you believe we will be?
No, first of all, Shireen, it's fantastic to be back in India and to be with you. And you're right. I mean, a lot has happened even since last year. I was very excited about sort of the prospect of what AI could mean. I was very stunned even at that point, seeing how some of the leading model work we had done was diffusing in India and even in something like the public sector, right? That was the first time I saw the Jugal Bhashani demo coupled with GPT-4, and I was like, really, it was a drop the mic moment for me. And to come back a year after, and we're no longer just talking about AI. I mean, some of the use cases I talked about this morning, I saw from customers, commercial customers, non-profit organizations. I think this is the fastest rate of diffusion of anything new I've ever seen. One good thing about this generation of AI is it actually reduces the learning curve, not increases the learning curve. So even for somebody displaced mid-career, you can pick up new skills faster, easier. So that's sort of one. The second thing it does is it's sort of, if the previous era was about information at your fingertips, I think of the AI era as expertise at your fingertips. Yes, I'm not at all saying that there is not going to be displacement. Like with any new technology, we've seen it. But I also am very optimistic that we even have both the policy tools and the actual tools to help us manage this transition in a net positive way for even a country like India.
What is it going to mean in terms of investment, Satya? At a company level, let's talk about Microsoft. You did talk about disproportionately investing in building out AI across your tech stack. And for the industry in general, what are we talking about in terms of investments?
Yeah, so for us, we are obviously very, very excited by what we're seeing in India. At the end of the day, we are putting our capital, we are building out our own data centers. We have 4 regions. We have, we'll keep expanding that. We're investing in our own people here, both India as a source of human capital that's producing products for us all over the world, but also us helping customers, the IT services companies that serve the world from here, equipping them with the latest and greatest. So that's, I think, I'll call it the core of what we do.
Do you have a number, though, of what it will take for Microsoft to invest here in India, and also what Indian companies will need to do in terms of further investment?
The economic data I've seen is if Indian economy is going to be, like, say, 5 trillion, the AI-driven part of it could be something like maybe 10% of it, maybe 500 billion of it.
Satya, let me end by asking you, a decade now at Microsoft, at steering things at Microsoft, and it's a very different company in so many ways, 3 trillion in market cap to just start with. What are you proudest of over the last 10 years of the changes that you've been able to achieve? And more importantly, what do you see as being the engines that will drive Microsoft from here on?
It's a great point, Shireen. In fact, the way I count my time is this is my 32nd year at Microsoft and my 4th big platform shift, right? I was lucky enough to be part of the PC client server, the web internet, mobile cloud, and now AI. And this is year 2 of AI. If anything, I'm going back in time, to your point, of learning from what was it like when year 2 of the PC revolution, year 2 of the browser, year 2 of, say, the cloud, and ensuring, and the lesson I learned is you got to really take the new tech, lean in completely, democratize it, and have innovation, right? Because at the end of the day, there is no franchise value in our business.
All right, some very interesting thoughts coming in from Satya Nadella. We'll slip into a short breather on that note on Business Lunch. But when we return, we'll get you updates on the CNBC-TV18's RBI MPC poll on what's expected. Stay tuned. Welcome back. You're watching Business Lunch, and let's focus on one big aspect which the market is glued on to the RBI monetary policy decision, which is due tomorrow. And the CNBC-TV18 RBI MPC poll shows that the RBI is largely expected to leave the rates unchanged for the 6th consecutive time. In fact, my colleague Ritu Singh is standing by with all the highlights of the poll. Ritu.
Well, I'll start with the background because this monetary policy is coming just a week after the interim budget, which had two positive surprises. First, that the government stuck to the path of fiscal consolidation, and second, it lowered its market borrowings for the coming fiscal. On the domestic front, you have growth that seems to be holding up, core inflation, which has come to below 4% levels for the first time since early 2020. On the global front as well, the Federal Reserve has indicated there'll be no rate cuts, at least in March. The US economy also seems to have managed a soft landing. So no big reason really to cut or hike or move, on rates whatsoever. And therefore, the street may well focus on liquidity over rates in this policy. Now, liquidity conditions, as we know, they've persistently remained tight since the last policy in December, with the exception of the last couple of days, of course. So the street is going to watch out for any direction on the liquidity front. How much liquidity is RBI going to provide? And more importantly, how will it provide that? Whether that will be through the variable repo rate route or some other instrument, any action, any direction on this front is going to be key to watch out for. Now, other than that, the MPC is expected to leave rates unchanged for the 6th consecutive time, because there's no real reason to justify a rate cut just now, because inflation is closer to the 6% mark than the target 4%. The committee is also expected to maintain the monetary policy stance at withdrawal of accommodation, as per almost all of our respondents. Some economists, however, pointed out that there is a very small chance of the stance being shifted to neutral, what with the interbank call rates declining below the repo rates, but that is not the base case scenario. Now, the communication is also likely to turn a little less hawkish because RBI will indicate its comfort with the current growth inflation dynamics. So 90% of our respondents expect the tone to remain absolutely even. Some even are expecting a slightly dovish tone from the governor this time around. Now, other than this, when will the cycle really turn? According to our respondents, the window may not open before the June policy, with half the respondents expecting it in the second quarter of the financial year and 40% in the first quarter of the next financial year. Now, as far as the other macros are concerned, RBI is unlikely to tinker with the inflation estimates for FY24 and even for the next few quarters. But when it comes to the GDP forecast, the majority is expecting the FY24 forecast to be left unchanged at 7%. But remember, the NSO has revised its estimates to around 7.3%. So a third are expecting that perhaps RBI may align with that.
All right, Ritu, thanks a lot for laying out all of those expectations and the results of the polls for us. With that, we're going to wind down on this edition of Business Lunch. So from Nisha, me and the entire team, thank you for tuning in. We have Mid Cap Radar up in 2.